Ready? Hello, everyone. Welcome to another Wednesdays with Wendy, where we talk about topics of interest to independent contractors and small businesses. Today, our topic is on estimated tax payments. All those fun things, more taxes, yes, but taxes you need to know about. If this is your first time joining us, you need to know that I am Wendy Kane. I'm the owner of Kane Accounting and Financial Coaching, and I do bookkeeping and payroll for independent contractors and small businesses so that you can have peace of mind at tax time and throughout the rest of the year. Okay, let's get right to it. How do you pay taxes? Let's review. There are two ways to pay taxes to the federal government, to the IRS. One is through withholding from your paycheck. The other is through quarterly estimated tax payments. We will talk about withholding on paychecks in about a couple of weeks. So watch for that, check back, and you can find all you need to know about how to set up withholding if you're on W-2 payroll. For those of you who aren't on W-2 payroll, or even if you are as an S Corp owner, you still need to know about estimated tax payments. So why would you want to make an estimated tax payment? Okay, so remember, there's two ways to pay your taxes. One's through withholding, and then the other is through estimated tax payments. These are, you literally send money to the government. So why would you owe that? Why would you do that? Well, if you're a sole proprietor or a single member LLC. So if you have incorporated on your state's Secretary of State website and as an LLC, a limited liability company, and you are the only owner of that. For tax purposes, you're just considered almost like a sole proprietor. You report your income on the Form 1040 that we all know and love. So if you are a sole proprietor or a single member LLC, you're going to owe self-employment tax on top of any income tax you owe from the income you earn. Self-employment tax is 15.3%. Yeah, I know, it's kind of steep. So let's see so that is why you would owe it. Um, I could get into the details of it. It's actually the Social Security and Medicare that is normally deducted from your paycheck, and then your employer also pays that amount in. That's where they get the 15.3% from. Most of you don't really want to know all the technical number details, so I won't go into that today. But if you're wondering, that's where it is. You can look up more information if you need to know more about that. Okay, so that is why you would owe it. You also, if you're an S Corp owner, you don't owe the 15.3% self-employment tax, but the income that your S Corp makes throughout the year, that amount gets put onto your Form 1040, your personal tax return, and you owe income taxes on that amount. Well, but how am I supposed to pay income taxes when I didn't have any withheld on that income? It's just income. That's where the estimated tax payments come in. Sometimes it's smart to make additional tax payments throughout the year if you think you're going to have a lot of income from your S corp for the year. Okay. So, what would you owe? That's why would you owe that? Now, what amount would you owe? Well, I already mentioned the 15.3% self-employment tax. Um, and then you would also owe extra for the income tax. So when you get down to the actual amount, like, okay, so just tell me, how much should I put back? I have seen recommendations anywhere from 20% to 30%, even 35% for taxes. Obviously, this is up to you. It's personal preference. If you think you're going to have a lot of income and you want to, you know, be on the high side, you don't want to owe anything come April 15th, then I would pay in some more. If you're okay with owing a little bit, or if you want to try and break even, you can pay in a little less. There's no hard and fast rule as to how much you have to pay every quarter. They're called estimated payments for a reason. You estimate them. You don't know until the year is over, how much you're actually going to know. I will mention if when your tax return is done, if you owe more than $1,000, you will sometimes be hit with an underpayment penalty. And so the IRS, they need money throughout the year. The federal government needs money throughout the year. So they don't want you to wait until April 15th to pay everything in because they have expenses January, February, March, June, July, they have expenses all year long. So they want you paying in every month or week or whatever. So that is why, I'm sorry, I lost my train of thought here. That's why you get an underpayment penalty if you don't pay in enough throughout the year. So if you want to avoid that, pay in a little more. If you're okay with it, the penalty's not too steep, pay in a little less. Like I said, some of it has to do with some tax planning, which we'll also talk about next week. But really, it's up to you. There's no hard and fast rule. Again, that's why they're called estimates. All right. So we talked about why you would pay them, what amount you would pay. How do you pay them? Like how do I send more money to the government if it's not withheld from my check? Well, don't worry, the IRS has a way. One of the easiest ways I have found is to use the IRS Direct Pay. This is on their website. You can go in and you flat out schedule an electronic payment. You tell them the date, the amount, what account what account of yours it's coming out of, and then what to apply it to, where you would choose estimated tax payments. And some people are nervous about that because they think, oh, I don't want to give the IRS access to my bank account. And I understand that, it is a little scary. The first time I did it, I thought, is this really going to work? But by law, they can only take out the amount you tell them on that date from that account that one time. You check a box saying, I understand this is the only time this is going to happen. So it's pretty safe. It's the way I pay my estimated payments. It's easy, it's quick. You can just go to it's one website. You just do it all in one fell swoop. It's not hard. If you have a more complicated situation, you might want to register for their service. It's called EFTPS, which is Electronic Federal Tax Payment System. And that is where you have to create an account, you have a login. It's a way to pay your payroll taxes if you have that and aren't paying them through a payroll company. That is a little more complicated, and for most of my clients, I wouldn't recommend it just because it takes longer to set up, but it is an option. Nothing wrong with that. The third way that I would recommend, it's slower, but you could do it, is mail a check. You can find a form on the IRS website for the estimated payments, and you print out the form, you write out your check, you put both fees in an envelope, you mail it to the address listed in the instructions because it's different depending on where you live. And then you just hope they receive it and you hope they put it on the right person. Like I said, you can do this. It used to be the only way to do it. Now that they have the direct pay or the EFTPS, I do it electronically because then it goes to your account. The people at the IRS are wonderful people, but they are humans, and you can imagine paper at the IRS, and you can take your chances that it gets to the right place and the right desk, but that would make me more nervous, quite frankly, than having them withdraw the money from my account and put it directly on my account at the IRS. But that is an option. Okay, so we talked about why you would owe, what amount you would owe, how do you pay them? Now, when do you pay them? There are deadlines for the quarterly estimated payments. And of course, being the IRS and the federal government, can it be as simple as the 4 fiscal quarters like a business? No. No, it is not that simple. These deadlines are different and they will trip you up. They have tripped even me up because for the life of me, I kept thinking one of them was 1 month, and finally I had to write them down myself. I was like, these are different. So I will put the link in the comments to their website where they list the deadlines, but I'll mention them here just to show you how they're a little off. So For income you earn in January, February, and March, the estimated payments on that income are due by April 15th. That's easy. Then, plot twist, April and May income is due June 15th. Okay, there's only 2 months on that payment. The second quarter, even though it's not 3 months, it's only two. Like I said, kind of weird. Um, then the third quarter is June, July, and August. Those payments on that income are due September 15th. And then to throw you off even more, the fourth quarter is actually 4 months long. September, October, November, December is all due by January 15th. So, like I said, they're called quarterly estimates, but it's not every 3 months. The due dates are a little weird, and I will put that link in the comments because I even have to look it up every time. I have to remember, oh, right, that's this month, not next month, because it throws everybody for a loop. Okay, that is a quick guide to estimated tax payments. And how does this help you pay less in taxes? Well, it doesn't necessarily help you pay less, but it's going to help you to owe less in April. If you pay money in throughout the year, then when your tax return is done, that amount plus any withholding you have gets credited to you so that if the tax return calculates that you owed less than that, you'll get a refund. Of course, if you owe more, you'll still have to pay in, but it will help you owe less in April, and you won't have to come up with it all in April, which is scary because not a lot of people can do that. Okay, that is it for this week. Everyone have a good day out there, and I want you to remember, no one is born knowing how to do this. It is okay to ask for help. Taxes and accounting are complicated issues. There's no shame in not knowing and asking for help. All right, y'all have a good day.